Cryptocurrency is one of the biggest innovations of the past 5 years, and it's certainly going to continue to grow. Seen so much in society, and we see crypto articles everywhere, and it's really easy to get kind of pulled into this. Now, understand that there's new business ideals and concepts being started every day and every week in this area. And there's certainly no reason why you can't get started. Understand that the internet offers most everything you need to get going and to potentially launch your own cryptocurrency based business or your own cryptocurrency. Now, first, let's explain what is the difference between a token and a coin. Before we dive in to the technicalities of how to create your own cryptocurrency, we should get these facts straight so that everyone understands some basic differences here. With that, we're going to first define what is a cryptocurrency. Now, let's take a step back and refresh our memory on the definition of currency. While we tend to think about currencies in terms of banknotes, coins, dollars, euros, a currency is simply a unit of storage and account and a means of exchange, i.e., a universally accepted way to obtain goods and services as well as to store and distribute wealth. Now, a cryptocurrency can be defined as a digital currency relying on encryption to generate new units and confirm the transactions. It has all the functions of the currency with the difference of running outside of a single centralized platform or a bank. Cryptocurrencies don't have banknotes, but they do have coins. So what exactly is the difference between them? Simply put, it all comes down to 3 points. Firstly, coins require their own blockchain while tokens can operate on the existing ones. Second, tokens are limited to specific projects. Coins can be used anywhere. And thirdly, coins can buy tokens, but tokens cannot buy coins. If you want to put tokens and coins in a real life context, think about tokens as the frequent flyer miles, while coins are actual money. You can use both to get an airline ticket, but with the miles, your choice will be limited to the air company that issued them. While with the money, you can take your business anywhere you desire. The bottom line is that you need to build a blockchain if you want to create a crypto coin. What are the benefits of owning your own cryptocurrency? Well, in some cases, it's a no-brainer. If your project or startup requires its own blockchain, you need to create your own digital currency to incentivize the nodes contributing their processing power. One more word on blockchains here. Many authoritative business analysts foresee a big future and a growing list of the markets in the industries where this blockchain technology will significantly disrupt the status quo and hugely reward the early adopters. And the good news is that for many fields, the blockchain technology has truly not arrived yet, so it's not too late to get started. The other important aspect is that when you decide to start a cryptocurrency, you get a whole set of powerful marketing tools and consumer benefits which will help differentiate yourself from the competition. And here's the list of some significant advantages. Firstly, eliminating fraud risk. Cryptocurrency is impossible to counterfeit and no party can reverse past transactions. 2. Providing transaction anonymity. Customers decide what exactly they want sellers to know about. Thirdly, cutting down operation costs. Cryptocurrency is free from the exchange or interest rates as well as the transaction charges. Next, offering immediate transactions. State holidays, business hours, or geographic location of the parties does not affect crypto exchange. Next, ensuring an immediate pool of potential customers. Now you can make business with those without an access to traditional exchange resources. No more trade restrictions in any market. And nextly, providing security for our funds. Since cryptocurrency is a decentralized system, there's no big brother figure like banks or government institutions that can seize or freeze your assets. How to create a blockchain. Now that you understand how your own cryptocurrency can boost your business, let's go over the main steps you need to build a blockchain. Step 1, know your use case. Very important. Do your business interests lay in a smart contract area, data authentication and verification, or in smart asset management? Define your objectives clearly at the very beginning. Step 2, choose a consensus mechanism. For your blockchain to operate smoothly, the participating nodes must agree on which transactions should be considered legitimate and added to the block. Consensus mechanisms are the protocols that do just that. There are plenty to choose from for the best fit for your business objective. Step 3, pick a blockchain platform. Your choice of a blockchain platform will depend on the consensus mechanism you've selected. To give you a better idea of what is out there, here's a list of some of the most popular platforms. And we have Ethereum, Waves, EOS, Coinlist, Chaincore, among many others. Step 4, design the nodes. If you imagine a blockchain as a wall, nodes are the bricks that it consists of. A node is an internet-connected service device supporting a blockchain by performing various tasks. From storing the data to verifying and processing transactions, blockchains depend on nodes for efficiency, support, and security. There's a number of choices you have to make about the nodes you will employ. 1, what are they going to be in terms of permissions? Private, public, or hybrid? 2, will they host on the cloud, on-premise, or both? 3, select and acquire necessary hardware details such as processors, memory, disk size, etc. And 4, pick a base operating system. Step 5, establish your blockchain's internal architecture. You got to be careful as some of the parameters cannot be changed once the blockchain platform is already running. It's a good idea to take your time and really think through the following. First, permissions. Define who can access the data, perform transactions, and validate them, i.e. create new blocks. 2, address formats. Decide what your blockchain addresses will look like. Next, key formats. Decide on the format of the keys that will be generating the signatures for the transactions. Next, asset issuance. Establish the rules for creating and listing all asset units. Next, asset reissuance. Establish the rules for creating more units of the open assets. Next, key management. Develop a system to store and select the private keys granting the blockchain access. Next, multi-signatures. Define the amount of keys your blockchain will require to validate a transaction. Next, atomic swaps. Plan for the smart contracts enabling the exchange of different cryptocurrencies without a trusted third party. Next, parameters. Estimate maximum block size, rewards for block mining, transaction limits, etc. Next, native assets. Define the rules of a native currency issued in a blockchain. Next, block signatures. Define how the blockchain participants creating blocks will be required to sign them. Next, handshaking. Establish the rules of how the nodes will identify themselves when connecting to each other. Step 6, take care of APIs. Make sure to check whether the blockchain platform of your choice provides the pre-built APIs, since not all of them do. Even if your platform doesn't come with these, don't worry. There are a few reliable blockchain API providers out there. Here are some for you to check out. Bitcore, Neuroware, Gem, Coinbase API, blockchain APIs, BlockCypher, and there's many others. Step 7, design the interface. Admin and user. Communication is the key, and a well thought out interface ensures a smooth communication between your blockchain and its participants. Here are a few things to consider at this stage. Webmail and FTP servers. External databases. The front-end programming languages. Example, HTML5, CSS, JavaScript, Python, Ruby, etc. Step 8, make your cryptocurrency legal. Slowly but surely the law is catching up with the cryptocurrencies, and you better protect yourself from any surprises by looking into the trends around the cryptocurrency regulations and the direction they are headed. Bonus step for overachievers: grow and improve your blockchain. You come this far now, so don't stop. Get a head start into the future and think about how you can boost your blockchain by tapping into the future-proof technology like IoT, data analytics, artificial intelligence, machine learning, biometrics, among other fields. Blockchain fork as an alternative to building your blockchain. As you can see, it takes a lot of time, resources, and particular skills to build a blockchain. So what can you do if you don't possess all of the above but still want to construct your own cryptocurrency? Then it's time to talk about Bitcoin forks. How to create a Bitcoin fork. It's time for another basic definition to make sure that we speak the same language. What is forking in cryptocurrency? In layman's terms, a blockchain fork is a software update. All blockchain participants, aka full nodes, run the same software, and it's crucial that they run the same version of that software to be able to access that shared ledger to verify transactions and ensure network security. Therefore, every time you want to change your blockchain parameters or introduce new features, you will need to create a fork. What is the difference between a hard and soft fork? Forks can be divided into hard and soft. Hard forks require 90 to 95% of the nodes to update their software. The system will no longer accept the nodes running a non-updated version. Soft forks are less demanding. Simply, a majority of the nodes is required to update the software, and those who run a previous version can continue to operate. Now, what are the Bitcoin forks? Now, the Bitcoin forks are the changes in the Bitcoin network protocol. Since the Bitcoin code is an open source protocol, it is a low-lift exercise for those who want to create their own cryptocurrency and build on the existing by adding new features or addressing current imperfection. How to create a Bitcoin fork. Option 1, use a fork coin generator. If you don't have any programming skills, services like ForkGen might be a perfect solution for you. ForkGen is an automated fork coin generator where anyone can create a unique Bitcoin offshoot by changing some parameters and rules. Option 2, do it yourself. If you want to take a hardcore way to create a Bitcoin fork and are not afraid to get your hands dirty, follow these steps. 1, go to GitHub. Find, download, and compile Bitcoin code on your computer. 2, then the programming part starts. You'll have to reconfigure the Bitcoin code, implement your customization. 3, publish the code, open source, back to GitHub. And number 4, provide a website and some kind of documentation, normally a white paper. Bitcoin fork success stories. Bitcoin forks are worth exploring if you want to start your own cryptocurrency, leveraging the social and financial capital around the Bitcoin name. Some examples of successful Bitcoin forks include Litecoin, Bitcoin Clash, Bitcoin Go. The main steps of how to make your own cryptocurrency. To sum it up, you have 2 ways to go about starting your own cryptocurrency. Build a blockchain or create a fork. To build a blockchain, you need to define how it will be used in your business model. Decide upon a consensus mechanism. Choose a blockchain platform. Design the nodes and blockchain properties. Provide APIs for the tasks executed on your blockchain. Develop an intuitive and comprehensive admin and user interfaces. Take care of the legal side of the business. To create a Bitcoin fork, you can either use an automated fork coin generator like ForkGen or download the Bitcoin code, customize it, publish, and maintain your code. Starting a new cryptocurrency, is it worth the effort? Being this far, you already have a very clear picture of what it takes to create a new blockchain. Before starting any new complex project, it's always a good idea to take a deep breath and evaluate once again if this is something you should be investing your time and money in. So how to establish if you even need a blockchain in the first place? Here's a list of questions that will help you answer this question before you make the commitment. 1, do you need data storage? 2, do your requirements reach beyond what a traditional database can provide? 3. Do you have multiple participants updating the data? 4. Are you looking to eliminate a third party? 5. Do you want to establish a safe environment for the parties that don't trust each other? 6. Is your environment going to have hard rules requiring little to no updates? 7. Do you need to maintain the privacy of your data? If you answered yes to 3 and more of these questions, you will get all the benefits of a blockchain, including enhancing data security, cutting down transaction costs, preventing frauds, improving efficiency, providing transparency, and executing smart contracts. While the benefits are numerous, the amount of work that goes into creating your own blockchain is significant and requires a wide range of knowledge and tools to execute all steps of the process in the most time and cost efficient way. Having employed the help of professional developers, you will significantly cut down your expenses in the long run by eliminating the room for errors and therefore time and cost for the rework and updates. Future-proof your solutions by working with experts who stay on top of all the latest industry developments and innovations, and free up your time for growing your business.